Hello everyone, my name is Akash and I'm a founder of Jordensky. We are a tech-enabled financial back office for startups and growing businesses and been working with more than 120 plus companies. We've started the CFO series wherein we are going to talk about cash flows, financing problems, cash flow problems, various budgeting, how to create an incentive plan in an organization. So stay tuned to our YouTube channel. Today we are going to talk about one of the most important and a crucial topic about any particular businesses. It's how to manage a cash flow really well. So to begin this video, I just put a stats which says that 70% of business fails due to improper cash flow management. Now, there are various reasons, cash flows have been not managed really well. Maybe the team is not efficient, or maybe the management is not aware what to do in terms of right processes or setting up systems in a place to have a cash flow mechanism really well. So in this video, I'm going to highlight what are the problems that is going to occur when you don't have a right cash flow mechanism in a place. And at the end of the video, we are going to discuss about what are the ways we can solve these cash flow problems and reduce the timelines in which the cash flows are been moving from selling the goods to ultimate collection. So here are the top 5 things that are going to happen if you don't have a right cash flow mechanism in a place or you're struggling with the cash flow management. Number 1, you will have to sell off your assets to manage the cash flows for a short-term liquidity. Number 2, you will have to raise a bank loan, which is a costlier bank loan or an unsecured loan from a bank to have to get your short-term. You will have to raise basically a short-term loan from a bank to get that temporary liquidity. Number 3, you will have to cut down the important expenses, maybe a sales and marketing budget, maybe an hiring budget, so that you have a sufficient breathe away in terms of cash flow management. Number 4, you will have to get money from the investors at a lower valuation as compared to what the valuation you have commanded earlier is, just because the investor knows that you require a cash flow today, otherwise you're going to die. And number 5th, and the most important, ultimately, if you're not in a position to have a good cash flow mechanism, you will have to forcefully shut down your businesses. So if cash flows are not really managed well, you're going to have to face either one of the situation, or you will have to a combination of this situation. Now, we all understand the problems, right? That these are the problems is if cash flows are not managed really well. But the aim of this video is to guide you how do you manage cash flows really well. So we are going to structure in terms of management a cash flow into 3 main aspects. One is accounts payable, second is accounts receivable, and third is an inventory. Now, if you manage to have a proper processes across these 3 areas, you're going to ensure that your cash flows are managed really well. So let's understand one by one. Accounts receivable. So accounts receivable is basically your customers to whom you have sold the goods and you have not received the payment from them. Now, selling goods to them, increasing the sale is fantastic, but ultimately, as a business, you would need money in your bank account to pay out your salaries and all that stuff, right? So you need to have a proper mechanism in a place to collect the amount which you have sold to your customers. So here are the things you can put in a place from an accounts receivable perspective. Speak to your finance team member as well as speak to your sales team member and understand what is an ideal due period you're going to give to your customers. Number 2, have a proper invoicing mechanism in a place that as and when goods have been provided or services has been provided, automatically the billing has been sent to the customer. Number 3, you need to have very strong mechanism in terms of following up with your customers to ensure that if the payment is not been received within the due date, then there is some penalty charges, interest, or something like that. So have a strong mechanism of follow-up. What we have personally seen is a right software which automatically sends an invoices, and an automatic follow-up system reduces the overdue of your customer. So have that system in a place. Now coming to point number 2, which is payable. So payables are basically your vendors from whom you purchase the goods or avail the services. Now these are basically your payables, right? Now you need to have a discussion with your vendors, not only from an price perspective. You need to also have a discussion with your vendors from a due date perspective. Negotiation on pricing is fantastic, but you need to start negotiating in terms of what is the credit period you're going to get. That is going to help you in terms of right management of your cash flows. Number 2, you need to understand what is the purchase orders we have placed and how much payments have been due on a regular basis, which will help you to understand or properly plan your cash outflows really well. Number 3, suppose you are in a situation wherein you've got an excess liquidity in your bank account. You need to speak to your vendors that if you provide that payment today, what is the additional discounts or benefit you're going to get. So that is something you need to do it from a payable perspective. Ultimately, a proper mechanism of payable will help you to reduce your outflow. So it is important to keep a check on that. Number 3, now coming to an inventory. Now this is applicable only for businesses wherein inventories are there. Now what I have seen personally from my working with multiple companies is lot of money get blocked in just inventories. They don't have a proper mechanism in terms of what is the right order quantity they need to order, what a customer analytics in terms of how the customer demand is in which particular month. If your business deals with inventory, here are the top things you should do it. Number 1, identify what is the quantity of inventory available today, and is there any way you can reduce that level of inventory and free or convert it into cash flow. Number 2, you need to understand what is your customer demand month over month and accordingly stock the level of inventory. Number 3, use a system to track your inventory level. Accordingly, you need to speak to your sales team as well as your budgeting team or marketing team so that they can plan the sales or an offer accordingly. So now these are the 3 areas you need to club together, from accounts receivable, accounts payable to an inventory, and effectively work in such a way that your cash flows are being utilized on a regular basis and there has been a rotation with respect to all these areas. Now, once you've identified this, there is one thing which every business should do. That is basically a cash flow forecasting. Cash flow forecasting is basically a mechanism wherein you plan your cash flow well in advance. You have a proper working in terms of what is the cash flows available today, where it is stuck, when are you going to receive these cash flows, and what are the additional avenues you're going to generate an additional cash flow in your business. So it is important to have a right set of cash flow forecasting mechanism in a place. That's it. Cash flow is basically what keeps your business running and what makes your business grow ultimately. So it is important to have a right set of checks and balances with respect to your cash flow. Now, if you want any help or assistance with respect to your businesses in terms of how can we streamline the cash flow processes, we are ready to help. Just mention in a comment box below and our team can reach out to you. If you like this video, share it with your friends, with your business partners, and share it with the community members. Thank you. We'll come up with the next episode soon.